All right, so welcome back, everyone. We have the chance to sit down with Michael, Toma, and Alejandro from the Disaster Trade team. We'll talk about a bit about some of our past year in trading, what things we went through, what things we wanted to kind of, some lessons we want to share with you, of course, some things that you can learn from us. This is the holiday season, near Christmas. We want to kind of have a quick chat, discuss some things that we went through and some things that can help you become better next year. And welcome them back to the podcast, Alejandro and Michael. Welcome, guys. Good to have you here again.
Yeah, great to be here. Happy holidays to you both.
Hi, everyone. Happy holidays.
So let's begin with, I want you guys to introduce yourself a bit more, tell a bit more about who you are and kind of what you do at Disaster Trade, and a bit of background about where you're at in trading. Michael, you want to go first?
Yeah, sure. Well, for those who don't know me, I'm Michael Toma, coach at Desire to Trade. I really handle most of the risk management focus elements of trading, not just individual trade stuff, but really risk management is getting someone going from A to B, starting out and getting to where they want to go. That's really the enterprise risk management of my role here at Desire to Trade. Alex?
For me, I am mostly working with Algos. Most of you may not have seen me that often in Desire to Trade, in the videos and that, as Michael, as Etienne, but I am mostly in the back end. I am usually helping members with Algos and everything that has to do with statistics and Algos automation. That's basically what I do, my expertise here at Desire to Trade. So anything from automating simple scripts to all the Algos that we run at Desire to Trade, and in part making the strategies that both Etienne and Michael trade into fully automated strategies. That's basically what I do here.
Yeah, cool. These guys always undervalue what they do and kind of the background they have. So the cool thing is they help me a lot at Disaster Trade to kind of make things better, to coach the students, to actually get results to traders, which is pretty cool. But they also have a pretty cool trading background, which we can definitely talk about later on. Michael, you've been trading for a lot more than I did. Another one is also kind of pretty experienced trading as well. So we can definitely cover that first. But tell me a bit more about kind of, and it's going to be applying to me also, is like, what things happened in 2023? What were your big highlights this year? What things are you happy about and maybe not happy about? We can kind of share and discuss these things.
One of the things I love about this is why I love the markets, because you just never know where they're going to throw you a curveball or a softball. And we have a few days left in the trading year, but my two biggest performers were bonds and crypto. I mean, I'm an S&P futures trader, with some FX. Where the hell did that come from? What's going wrong? What's going on? But that's the beauty of the markets. When opportunity serves, you get a chance to hit it out of the park, and you never know. So you just kind of roll with the punches and go with it. That's not a problem. That's like the beautiful things of the markets. Now, as you said, what's the challenge there, or what are some of the things I could have done better? No question, I could have pushed my size better, on my A+ setups. I'm so conservative relatively in proportion to, account size, and particularly on the managed side, but there's no question I could hit so many home runs this year, but, I held back a little bit. Maybe it's just me, but that's something where I look at it as a disappointment. But again, it's, I'll grab the tissue and cry a little bit. I'm okay with that, but just be open to those markets, and I took advantage of that for sure.
So for me, the main thing was trying to get additional things up in the map in terms of trading and in terms of algos. Last year, in terms of my algo portfolio, it was a bit smaller, and also it was the first time we launched the Algo Nation program. So for me, this year was a lot of taking all the learnings from last year and improving those things a lot, making a roadmap for what's going to come next year, but mainly trying to simplify that, improve the process, and work a lot in improving the quality of my optimizations and the things that are going to be going from my portfolio. So overall, you can say that my 2023 portfolio, it's a lot better running or better optimized than my 2024 portfolio, which was bad. So that was the main part that I worked on. And one of the biggest disappointments, it's some of the things that happen kind of naturally when you are algo trading, which is that I spent like 3 months working on certain things, on certain updates, tentative updates for the main algos that I am running. And it was 3 months of, putting some things, testing some things, and then trying to stress test it. And then at the end, it didn't pass the stress test. So the biggest disappointment is, you work 3 months, you do a lot of effort, but then it doesn't pass. So you go back to what you're already doing before. So the disappointment there, it's you work so hard and then you kind of like don't have anything to show for it for those 3 months of really hard work and continue with that. Now the silver lining is that what I have been running for those before that, it's still it's still working, it's still going well. So help validate the previous process a bit more. But it's just the part of in trading we don't get regarded for how much effort we put, but what are the results we're getting, right? So it's not about you're putting 10 hours, 20 hours. It's more about the whole process around it.
Yeah, cool stuff. I think I'm starting to realize, and this is something I spoke with Michael in the past, is like it used to be cool to go out with my charts and like look at my charts like every 4 hour and stuff. And I used to love it, like travel and look at the chart once in a while and stuff and place trades. I'm at a point where I feel like I don't want to be at the chart anymore, or at least I don't want to have to kind of spend time on the chart to place my trades. And this past year has been a big evolvement for me to kind of focus more into algos and ways to just minimize my chart time too, and kind of ways to be able to still make a roughly same kind of P&L, but without being in the chart. So things like a bit higher time from trading. I don't trade the 1 hour charts anymore. I move back to 4 hour chart, more like now 8 hour chart. So kind of in between. So that kind of saves me time that way. But also I don't want to be there like in the day having to like rush to go at the charts and look at the trades and place trades on my phone. That stuff isn't cool to me anymore. It used to be a time where it was fun and everything. It was cool. But I'm at a point where I want to have something more hands off and kind of that flows better with my lifestyle, let's say. And it's kind of been my biggest change for the past year.
Say it's not lazy. It's really adapting. And we talked about this, really adapting trading to your lifestyle. And, lifestyles change, lifestyles happen. And, if you can adapt that, that's a beautiful thing about this business that we sometimes don't appreciate enough. I certainly don't do. You have to be in front of that screen. Not at all. I mean, we've talked about where our performance really, some of my best trades have been in a hotel room on a laptop, like when I'm sightseeing and stuff and things like that, or on a cruise ship. That's fine. I mean, let the markets do the job. Your job is to identify and execute. After that, go out, enjoy, let the trade work. So it's good to see that you're adapting. And I kind of feel like I'm a mentor in that sense where I want to identify, and to our members too, match that lifestyle with the style of trading that you're doing. That's a really, really cool thing when you get to that level.
You got to tell people more about this. So you're doing cruises all around the year. I think you've done 2 or 3 in the past year, if not more, if I'm not mistaken. How do you keep up trading while you're on a cruise in the middle of like the ocean or something?
Yeah, the ocean is a space. Connectivity is global. So, and now the cruise lines mostly have Starlink, which is a pretty cool Wi-Fi thing. I can do that. So one, obviously you could run algos. You can go automated, reduce size that way. But a lot of it is really just, like I said, 10 minutes in the morning, have a little cappuccino over on the balcony and just kind of set my trades up for the day and just let them go. The key is not to, the last thing I want to do is be on a cruise ship, checking having my phone in my hand, holding my wife's hand in the other. So that's not pretty cool. It's not good for business, is not good for marriage. So, but just let it go. And part of the success of trading is letting trades play out. Well, when you're forced to let that happen, whether it's through internet or you're on an excursion in some ruin somewhere, let it play out. It almost like it actually forces good discipline, and the compliance rate in my trades actually, holds pretty steady on those things because it forces you to do it. So, whether in a hotel room or, on the Lido deck, it's all about identification and execution. Nothing really changes.
We'll get to that in a minute, but I'm curious to hear, especially on Algo's side here. A lot of people expect that you as a trader have a big advantage. Like when you look at the chart, you can pick trades better than, let's say, an algo would do it. So therefore, algos cannot work long term. What do you say to that? Because to me, algos are basically a thing that you've done before, but you've coded it. So it's always the same, like always systematic. How do you see this kind of stuff?
Yeah, for me, it's definitely, I come from the background of price action trading. So that's the first type of trading that I started with that got relatively successful and I was profitable with, was price action trading, which, if you try to put like algos and price action trading, feel like completely opposite worlds. One, it's a lot more discretionary. It's much more like being the charts all the time. And the other one, it's patterns and all about the numbers, exact mathematical equations essentially in the background, right? Everything like that. But what I have noticed is that it's all about market structures. And while it is pretty hard to teach, to say it in a way, and I'll go market structures, there are things that we can make in order to implement those concepts and principles of price action trading, or like more general terms of market structure and market filtering into Algos. And that's something that I spent a lot of time on doing in late 2021 and early 2022 before we launched Algo Nation. And that's basically all of that was how to do that. I think the first iteration we did of that with Etienne, it was the support resistance areas with the BPR strategy that we had for a long time. And the idea, it's marrying the concept of you have that part of human discretion and trying to adapt it into Algos, trying to parameterize it. But in the end, for me, Algos, it's not something that should be static. Like any trading, even if you are a manual trader and you are performing exactly the same things every single time, over time, with your experience, with the market context and all the things that change, you're going to start making small changes at minimum. You're going to start making those small changes and adapt the things. So with algo trading, it's pretty similar. At minimum, you're going to have to be doing some changes, like maybe every 1 year, every 2 years, every 6 months, depending on your strategy. And that could be as simple or as small things as small tweaks, or as called revamps of, like rethinking the strategy or adding, much more complex filters in there. But for me, even if I have something that is already working, I'm always, you can also get bored from just letting the algos do the work. They may be doing pretty well with your money, but if you don't have anything else to do as development, I feel like you can also get like that part of like stale as a trader if you don't do anything with development. And as an algo trader, development is what else could happen. Like those 2 months that I mentioned that was part of this appointment, I was testing different things, trying to different concepts to apply to my algo trading to see what works. So that's the thing that gets you there. For me, algos are not something that you should just put there and forget forever. It's more like an evolving, living thing that you are feeding constantly as a trader. It's a much different job than a manual trader, but it's still, you have to be there. You don't have to be there in the day-to-day for the algo to run the things, but you have to be there in the more like broad sense in order to get the strategy and try to see what are the key strategic points that are going to move you to your desired goal as an algo trader.
Now, in the past year, we had a lot of changes in the trading industry. We have prop firms that kind of took a hit. We've been kind of helping people with prop firms for a long time to help them pass the prop firm challenges. First of all, the prop firm challenges changed a bit. Now it's more of the rules changed a little bit, and then you have prop firms who went bust, who kind of had some legal issues. Where do you think the prop firm world is headed? What do you think is going to happen next with these prop firms, Michael?
One of the things I love, let's look at the positive. What I'd love to see is these prop firms relaxing their rules, which has always been sort of like a chokehold on a lot of traders. I think that's great, and let's weed some of these actors out, and let's give the ones who really are serious about allowing traders reach their funding goals. I've always been a big believer in that the prop firm funding aspect is the first stage of funding. Once you get that and you've built your resume, to me that's more valuable than any funding they could do. Now you can go out and get yourself exposed to other types of capital, managed capital. There's so much money out there trying to find a home, and quite honestly, at 4% for like a U.S. Treasury bill rate, it's fine for some, maybe it's like that. But when you can do 18, 20, 24, even 30, 35 on a good year, that raises some eyebrows, even if it's for a portion of attracting certain portions of capital. So I've always said that, and I believe this more now than ever, that the prop world is actually very accommodating to what traders need to do. Now they just have to execute their plan and do that within the constraints of what they need to do. It's no more pointing fingers at prop firms. It's looking in the mirror saying, this is the opportunity, this is what I can do. But now once you get funded, let's bring it to another level. Let's talk. Let's see if we can get some outside capital to help you out as well.
It's funny because you would have think that the win rate of these prop firms have changed a lot because they relax the rules. It's easier to pass. You would think the win rate would increase by a lot. And it seems like it's for most prop firms staying around the same. They still have the same amount of people failing the challenges. What do you think that is? What do you think makes the big factor in whether you pass or fail a prop firm challenge?
Yeah, I mean, it comes down to so many variables in the markets, but doesn't it come down to two things, right? It's either the markets or you, right? So it could be the markets. I mean, sometimes it's just, trading strategies don't work very well in choppy markets and things happen. But really, let's focus. And if there's one thing that, our listeners look at next year and say, okay, I'm going to take a real big focus and say, I'm going to focus on me. I can't control the markets. I can't control what the Federal Reserve Chairman is going to say something stupid at 2 p.m., right? But I can control what I identify, what I have in my strategy, what works in my strategy, what I need to shift, and what I need to do to execute to get it. If I can do that, I have a good shot. And if I don't, okay, maybe on the second time around, I'll do it. But let's focus on the things you can control versus the things you can't. Once you do that, then, it's kind of open season. Let these firms, fund you, and then obviously provide good risk management to keep it funded and to grow your funding. That should be sort of a goal for those looking to get funded in 2024.
I guess the other factor is there's a lot more people who got into trading recently, especially for crypto during COVID as well, with the new platforms that were out there. Maybe not new, but the platforms are getting more popular. I think it brings a lot of people to trading that don't necessarily know how to trade. They kind of just want to try it out. They see that's more of a game. What do you think that's going? Do you think that there's going to be more people in trading who see it as a game and kind of want to kind of trade for action? Or do you think it's going to kind of normalize and go back to people treating it more seriously as it should be?
Yeah, and after I want to hear Alex's comments on how the automated aspect can benefit those people. But this is the beautiful thing about this business where it's open to everyone, and you don't have a boss. But here's the problem: you don't have a boss. Okay, so you need guidance and direction, and quite honestly, mentorship really will help a lot out. But if you want to be open to that and the gamification, at the end of the day, and I hate to make this boring because it's such an exciting business. But the more boring it gets, the more successful you'll be. So stop looking at it as a video game or taking a shot at some meme stock, some guy in some social media thing, touting something. Slow, methodical execution wins this game. All right? Have a little fun with it. Sure, I'm playing with some coins and enjoying it. Don't get me wrong. I'm a gambler at heart. But at the same time, I know what my job is, to execute a plan. And those who do that will be successful in the long run. Alex, what are your thoughts on the automated element of that?
Before going to automated element, I wanted to add that part of the gamification was made by many of those providers, some of those crypto companies, and that because they knew they will get more people in that will trade more. They didn't care about if they want to win or lose money. Just trade more, and for the exchanges, more trades, more commissions, more money for them, right? So that's basically what they want. They want more people in playing the game, essentially. And that's why they are making it into a game for them to attract more people that maybe wouldn't have otherwise entered. So that's part of the thing. And I think that will continue because we have always, historically, there has always been a part of people that it's going, trying to use the markets as a casino in Las Vegas and trying to use it for fun or for entertainment. People that are more serious or that are, learning, we know that it's not as easy and it's not something that you're going to be, making millions in the next couple of weeks, couple of months. So we take it a lot more seriously. I wanted to add one thing that you probably, if you have seen the path of the prop firm rules throughout the years, one thing that hasn't changed much, it's the drawdown and the risk rules. Yes, some of them have relaxed a bit, but that's the main thing that has not really changed much. It's, risk per trade rules, having a stop loss rules in most prop firms, and maximum drawdowns. They have different parameters for maximum drawdowns in different prop firms, but that's the main thing. So in my opinion, they haven't changed the numbers because the main problem for most traders that were dry applying or trying to do those prop firm challenges, it's not necessarily the trading plan, the strategy it's the risk part. Yes, we have had many cases, including from our members, in which they say, oh, the 30-day limit when FTMO used to still have the time limit on that. It's really stressful, and it puts if I have a bad luck in the market for 1 month not being such a good month, I may not be able to pass the evaluation because of the time. But now that that's eliminated, it's only part of the risk part, and most people, it's like, oh, I was going well, and then I did something, and I blew my account. So I feel that they haven't changed that much, because even though they have stacked now the deck is more stacked on the trader's favor, the risk part, which Michael wrote at least one book, I think 2 books about it, about the topic. That's one of the biggest aspects that are still holding back, to say it in a way, that traders are applying for those online prop firms. So just wanted to add that on that part of the conversation before going to the automation part, which can help in that part, because you can go automation as simple as improving your alert systems, improving your methodology to kind of like give yourself a break from getting into those risk situations, from over leveraging, from trading too much and revenge trading in your account. But alternatively, you could also automate your strategy if you have a good strategy and you have you have good trend good strategy, but you maybe have a bit of, I have some troubles pulling the trigger, or I have some troubles with consistency in execution, but I still have the discipline part. Then you could automate your strategy and let the algo essentially do the execution part. And you still have to have the discipline to let the algo do its job and let it do its own thing. But you extract many of the things that we as humans tend to fail in terms of executing adequately, or simply that day you feel a bit sick. The algo doesn't care about that. The algo, as long as it's computer where it's running, it's not crashing or you are not kicking it or anything like that, it's going to continue running, no matter how you personally feel that day, or how if you are sick that day, or anything like that. So I think that could be a way that traders could explore, trying to automate as much as possible their task as traders in order to improve their chances of success for prop firms.
Definitely. I think that's definitely one way to do it. If you automate things, that can be better, because then you don't have the issues like strategy jumping and like doing this and doing that. I will say there's a bit of kind of work involved with making sure the algos work with your prop firm too. Like if you just buy an algo, and like I think it's a lot these days, like you have so many ads for like, we'll pass the prop firm challenge for you, and then like they just run an algo in the account, and then they kind of hope that you pass, and that's it, and then you pay for that service. I think that first of all, it's pretty dumb, because you never build the skills to actually become a good trader. But second of all, it's prop firms don't allow it, so you might kind of lose your account at some point. And also, it's not how it works. You cannot just plug and play a script to get successful forever. That's not how it works.
Yes, I think that a big part is people are looking now also at the mix of algo trading and prop firms as easy way to make money. Before you had such prolific outlook in terms of prop firms available online, you usually had people like, oh, algo trading, I can just buy an algo, put it running my money, and then just leave it there and not do anything, right? Just let it run. Now they have that, but they are now extrapolating it in like, I can do that, and I can put it in a prop firm relation. So let's say I pay $1,000 for the algo and $500 for the prop firm, and I have $1,500, and I can make like $10,000, $20,000 a year with that by using the prop firm and applying it like that. I think that's the wrong way to look at it, because you're going the easy route of, I want someone else to do everything for me. You just want to buy the algo and applying it, like blindly, to say it in a way, without you doing your testing or without you doing your own personalization of settings. And then you're trying to use other people's money, essentially in the way of a prop firm, to leverage that. So I think it's not the correct way to do it. I think the best way for people will be, yes, you can get something from a reputable vendor that will get you something that it's already working. But you should try to understand what's happening behind the scenes, what's the strategies, what are the things, so you grow as a trader. Because if not, once that algo shop or the person that is selling you the algo goes away or stops providing you their optimized settings or their work updates every 6 months or every year, you're going to just, whatever you were doing with it, it may stop working, after 1 year or 2 years, so they stop, and you are not going to have any idea what to do with it. And secondly, you're going to go back to square one. So if you get it, but you start learning, you start developing at your own pace, maybe you can use that to have it trading on the side while you are developing at your own pace. I think that's the most reasonable way to approach it, something in which you have something running, but you are also still developing yourself in there. And in terms of applying it to prop firms, I have seen it that it's easier than ever to model an algo to almost any prop firms. 90% of the prop firms out there now don't have anything regarding rules around news trading. Most of them will have a waiver in which you can pay a bit more to be able to trade on weekends, which was another big thing for several algos. And they even have now ones that you can pay a bit more to get no stop loss, which I would never recommend to you that, because that's pretty bad way of trading without stop loss. But if your algo maybe needs a few seconds to calculate the stop loss and those things, that could help. So there are many options now in the algo, or in the prop firm world, that you can eliminate most of those things that made it difficult, like, oh, my algo needs to trade news. Now I have to backtest and make sure that it works without any news events in there. And now you don't really have to worry about that. All you have to worry about is risk and profit. Is my algo on average able to pass the evaluation within a reasonable amount of time? Right? Maybe your algo is able to do it like in 2 years, but that's a bit too long for most people, right? Maybe like in the next 3 to 6 months is that reasonable time. And can it do it by dialing down the risk per trade to a reasonable risk per trade that is not going to blow the account before it gets to the big profit? That's basically now the extent of how simple it is to think of applying an algo, as long as the algo strategy itself, the underlying structure of the algo, what is behind it, the strategy, it's correctly in place, it's a solid strategy. Then the other part, it's more about just making sure you're not risking too much or too little, and letting it run and letting it play, which it's currently what a couple of my students are doing, and they have those things, and it goes sideways for 3 months, but now they are about to pass 6 evaluations. They are just like 1-2% about away from passing 6 evaluations with their algos, and it's just letting it run and proper risk modeling.
Now, we do have a program where we help people kind of use our strategies at Desert Trade to run them automatically. It's called Algo Nation. And the way we tell people to go about it is like, yeah, of course, you can use your own settings, you can use your algos and kind of use the settings we've already tested, but they should become at some point able to run it on their own, where they don't have to rely on us all the time forever after. Like, we can help them as long as we can, but we cannot babysit them for the next 10 years with these algos. So there's a bit of work involved with like learning the strategy behind it, learning how to find your own settings to eventually, how to build your own portfolio. That's important. You don't need this at first, but you do need this for like the long term, definitely. Yeah, I think that's a big key. So, Michael, I want to ask you, you started trading a long time ago, which is definitely different from what some people are facing these days when they want to learn to trade. It seems like there's all this information out there of like how you can trade profitably, like strategies on YouTube and everything. And a lot of people expect that, well, all the info is out there for free. Like, you don't need to get a coach, you don't need to get any kind of courses, no need to waste your money on these things because everything is out there for free. And that was not the case back then, but tell me if you see kind of a better way to do it and how to really give yourself the best chance of becoming a profitable trader.
Yeah, well, thanks. I feel old now. Yeah, time to retire. There we go. That's my goal for 24. No, so it's funny when we first started out, back in the caveman days, several years ago, we were hungry for information. Like, we would like buy coffee for people at expos and, can you tell me this, and or talk to people on the sidebars and stuff. Now it's like so much thrown at you. I'm like shielding a lot of the information, and I'm also, when I coach students, is to shield a lot of that, like limit yourself in doing it. Like, absorb, but don't just go crazy of the next shiny object. I've said it several times before, is simplicity really wins this game, and focusing on your skill sets, of identification and execution. There's certain principles to apply. Once you can do that, a lot of the noise you really don't want to hear. And I know some of the ones that are really started getting traction and getting funded and just successful as a trader, they're like, I'm modeling them to weed out things. So, look at your YouTube subscriptions, things like that, and just stop hopping. This is a good time of year where you look back at the year and say, what did I do right? What did I do wrong? And the beautiful thing, while everybody's looking at that ball and fireworks on New Year's Eve, is you got the reset. Everybody gets a free pass. It's January 1st, everything's a clean slate. So I made mistakes too. Guess what? I'm putting them in the past and focusing on that. So when you look back at some of the things, like how you develop as a trader, and take my experience, but it's really about keeping it simple, weeding out all the stuff. There's so much stuff out there and junk, and everybody has little nuggets, and you'll pick a few things out and stuff like that. But it's really about focusing, understanding this is very doable, very achievable. But like anything in life, it requires action, effort, study, and learning from mistakes. That's really the secret sauce of this business. And unfortunately, about 80-90% of the people that we feel don't make it had the skill, had the focus and the knowledge, but they just didn't put the work in. And it frustrates us, as you know, as a coach, as a company. But the ones who are there, ready to put the work, will support you the whole way.
Good point. Do you feel like a coach is still beneficial these days? Because you could just like watch YouTube videos, follow them on YouTube, and still learn the same stuff.
No. I mean, one of the things like this information overload actually requires sort of mentoring and guidance because it's just too much. But at the same time, I embrace, like if there's certain things, I use that as a tool to help complement the entire mentoring process. So a lot of times I find that, my coaching role is evolving to more of a mentoring role. It's about having them manage the lifestyle, not getting too frustrated, identifying overconfidence. You almost become sort of a mentoring psychologist, which is a very key skill set, as opposed to, let me show you how this strategy works. And quite honestly, I think that's the value offering, and what separates us from everyone else is, rather than, here's where to enter, here's where to get out, it's beyond that. You sense things like, how's it going? Oh, I didn't hear from you this week. What's going on? A little problem at home. Reduce size. Like, who's going to tell you that? Like, where are you going to get that from a video? Let's reduce size, take 2 weeks. We'll take a snapshot and we'll identify, how did you handle that during your sort of, little family crisis, things like that. These are the sort of little value offerings that coaching and mentoring brings. And, that's, I think, what makes us ultimately unique and special.
We definitely covered a lot here in this video, and we have a lot more we can cover in the next one. So next week we'll come back for a different video with Michael and I as well, the same stuff. Talk about our goal for next year. We'll share with you our process for kind of reviewing our year, planning out for next year, things we'll do different to make sure we achieve our goals for next year. So that's going to come next week. Thanks you guys for being here as always. We'll catch you back here in the next video in 1 week. Ciao.